Are you familiar with a backdoor Roth IRA? Well, here to talk with me about that is Amy Shepard from Sensible Money. Amy, welcome.
Hi, Bob.
So lots of people are talking about this thing called the backdoor Roth IRA, but maybe before you talk about that, we should talk about what a Roth IRA is.
Yep, I think that's a good place to start. Roth IRAs are great planning tools for retirement. Really, the big benefit of a Roth IRA is that it has tax-free growth and tax-free withdrawals in retirement. Traditionally, a lot of people saved in what are called traditional retirement accounts, where they got an upfront tax deduction, but then when they retire, all the withdrawals come out and are taxable. A Roth IRA is essentially the opposite. You pay the tax today, and then you let the money grow. And when you take it out, it's tax free. So it has some really great long term benefits for retirement planning.
Right. But there are some income limits to contributing to a Roth IRA?
Yes, that's correct. So ideally, a lot of people want to contribute to them, but if you make above a certain amount, so for 2025, the threshold it's what's called your modified adjusted gross income. If you're a single tax filer and you're under 150,000, or if you file, married filing joint and you're under 236,000, then you can contribute the full amount to a Roth IRA. But if your income is above those thresholds, essentially you make too much money to directly contribute to your Roth IRA.
Right. So those folks who are above the income limits do have an option?
They do have an option, and that's where our topic comes in. So, what is this backdoor Roth IRA? I have seen some articles or just some comments where sometimes people think it's like a third type of IRA. So, there's a traditional IRA and a Roth IRA and a backdoor Roth IRA. It's actually not its own account, it's just a different set of steps to get money into a Roth IRA. And so, really, to simplify it as much as possible, it's a two-step process. So, a backdoor Roth contribution, sometimes people call it, is step one, you put money into a traditional IRA. And step two is you convert that traditional IRA over to your Roth IRA. So that is, in its simplest form, what a backdoor Roth contribution is, a two-step process of funding a traditional IRA and then converting it over to the Roth. Sounds simple,
That,
right?
it sounds simple, but there are some tax implications, I think.
There are tax implications like anything. There are ways to keep the backdoor Roth process pretty simple and straightforward. The key is knowing the rules. So, in its simplest form, the best way to take advantage of a backdoor Roth contribution is if you have zero traditional IRAs. So when you think of a traditional IRA, are a few different types. So there's a true, just traditional IRA. There are SEP IRAs, there are simple IRAs. If you have no money in any of those types of IRAs, then you can do the two-step process I just explained, and you convert it over to the Roth. And essentially, as long as your income is above those thresholds I mentioned earlier, you can do it without any tax implication. So, kind of an example there would be, okay, you have zero IRA assets. You put in, the maximum for the year, but because your income is so high, you don't get a tax deduction on that initial traditional IRA contribution. So then what happens is you didn't get any tax deduction, and now you convert it over to the Roth, and there's zero tax implication because it's money that you have already paid tax on. You aren't in the IRS's eyes, you're not double dipping. You didn't take a tax deduction and then get a tax-free conversion. So that's when it's really simple, is if you have zero IRA assets and you can do it in those two steps, without tax implications.
But a lot of people do have IRA assets for one reason or another, rollovers, inherited IRAs, et cetera.
A lot of people do have IRA assets, and that's where it gets messy because people can, see this idea, oh, I just do this two-step process and, I'm good, no tax. But if you have IRA assets, then there is something that comes into play. It's called the Pratta Rule, which is a calculation that you have to do to say, well, maybe this year, in 2025, maybe your income was too high to get a tax deduction on your traditional IRA contribution. And so, people think, oh, well, this year I'm above the income amount, so I can do it this year. But if you have any existing IRA assets, they get factored into the tax calculation. And so usually what happens in a situation like that is there is a tax formula that has to get calculated. And then instead of the full conversion being tax free, there is tax that is due on it. And it could be considerable depending on how much IRA assets you have. So typically, most people find this approach to be valuable if they have zero IRA assets. When you add in, IRA balances, that's where the complexity comes in and it kind of loses its appeal a bit as well.
Yeah. I'm sure there's some mistakes that people need to avoid or think about.
Yeah, absolutely. So definitely the pro rata rule, and just, we have to be aware that if you have IRA assets, it's not a simple and straightforward two-step process. Lately, the biggest thing I have been seeing is that as part of that two-step process, there's also a two-step like reporting process on your tax returns. So, simple form is you contribute that money to your traditional IRA, but your income is too high to get a tax deduction. And then you do the conversion over to the Roth. Well, on your taxes, there's two steps to record that. So step one is you have to complete what's called Form 8606. That form is what tells the IRS that, hey, your income was too high, you contributed to a traditional IRA, but because your income was too high, you didn't get a tax deduction. So step one is very, very important. You have to file Form 8606. And then step two is, if you're doing your taxes or your tax preparer is, you're going to get a 1099 that shows your Roth conversion. Well, you have to do the 8606 first to show that the money in your traditional IRA that was converted did not receive a tax deduction. And so when you combine both of those things, Form 8606 with the 1099 for the Roth conversion, the result is a tax-free, backdoor Roth contribution.
Okay. So there must be some times when it's a good idea to do this or than not.
Yep. So yeah, I think the best times are when you have zero IRA assets and when you are good at keeping track of the details, so you can let your tax preparer know that you are doing this, specific strategy. One other important factor to know too is I have seen some mistakes where someone will follow what they think is all the right steps. They'll say, okay, my income's too high for a tax deduction. I have zero IRA assets. I'm going to go ahead and do this. But then they think that they have to have zero IRA assets on the day that they do it, which is not the case. You actually have to keep all of your IRAs at zero balance through the end of the tax filing year. Because when you fill out that form 8606, like when you fill it out for 2025, you have to, it'll ask you, what is the balance of all IRA assets on December 31st, 2025. So that's another piece of the strategy you have to make sure you consider, as well as you have to plan for it for the whole tax year. But yeah, typically it makes sense for people who have zero IRA assets. They have income above the threshold to be able to directly fund a Roth IRA. And they also have income above the threshold so they don't get a tax deduction on their traditional IRA contribution. So lots of lingo in there.
So any alternatives to this strategy that might be less complicated?
Yep, there are. So there's always options. I think that's usually a good thing. So more and more companies are offering the option for people to contribute to a Roth 401k. And there are a lot of benefits to using a Roth 401k, in addition to, or, in exchange of a backdoor Roth IRA strategy. With a Roth 401k, there's a couple benefits. I mean, one is that you can fund it directly through payroll. So it's kind of one of those automated things, which is usually helpful. Another big benefit to a Roth 401k is you can put way more money in it. So for 2025, if you are under age 50, you could put $23,500 into a Roth 401k. If you compare that to a Roth IRA, the maximum you could put in is 7,000. So you get 3 times as much that you can put in, more than 3 times as much. That's one benefit. A common question I get from people is when they think of a Roth IRA, there are income limits. We've talked about that a little bit today. And sometimes people will say, oh, I have a Roth 401k at work, but I didn't think I could use it because my income's too high. And another benefit of Roth 401ks as an alternative is there are no income limits to a Roth 401k. And so that is typically a much better, simpler alternative. If you have access to a Roth 401k, you can fund it through payroll. There are no income limits, and you can put more into it. And so, depending on the quality of your work 401k plan, sometimes starting with a Roth 401k could be a good first step. And then if you have extra money that can be saved, then maybe the backdoor Roth strategy could be a good secondary option.
Amy, this has been extremely helpful. Anything we missed or just bears reemphasizing?
I don't think we missed anything. I think I will just reemphasize that, like most things in personal finance, it's never as straightforward as you think it might be. So it's always a good idea to just do your homework and make sure you understand all the nuances before you decide to go through with a strategy like a backdoor Roth funding.
Yeah. And I'll just add, having a good financial planner and maybe a good CPA would be a good backstop for things that could go wrong that you didn't anticipate.
Yeah, and you could do everything right and then file your taxes. And I have seen several times, like I said, where the tax-free conversion part gets missed because of that missing Form 8606. So not only do you have to plan ahead correctly, but you also have to make sure all the follow-up work gets done correctly as well.